Welcome to the Knowledge Stack Podcast. My name's Jason. Thank you for joining me. Today's episode was recorded back on May 19th. I had a conversation with Chase Larson. He is the Executive Vice President and Chief Lending Officer at St. Cloud Financial Credit Union. Chase and St. Cloud have partnered with a CUSO by the name of DaLand, and they have a credit union digital asset vault solution. Chase and I talked for about a half hour about digital assets, about where he and I see the crypto market, specifically for credit unions, headed. There's a lot of focus recently with some legislation that's made its way through the Senate and through the House of Representatives regarding digital assets. We talked a little bit about stable coins. We talked about payments, and I think the credit union industry and quite frankly, financial services in general are maybe seeing the birth of a new payment rail system in digital assets in general. And Chase is a smart guy. He's got a lot of really great ideas about crypto. St. Cloud Financial is a roughly $380 million asset credit union. And they're very aggressive and very progressive. I had a chance to meet Chase and some of the other executives from the credit union at the Credit Union Summit a few months ago, and they were very impressive. So it's a great conversation. I'm sure there is a lot more to talk about since we've recorded this. There's been some developments in the crypto space. Circle just recently had a initial public offering. There's been some back and forth with some of the credit union industry groups about the Genius Act. So all very timely information in this conversation, but some of it's changed a little bit. But I think the bottom line is for at least the next 3.5 years with the current administration, we're going to see a very digital asset friendly administration and a lot of bipartisan support, quite frankly, for digital assets. There are a lot of startups, a lot of CUSOs, a lot of fintechs that are looking to dip their toes into this space. And Chase and DaLand have been doing it for quite a while. And, we go through some of the recent history of crypto and the crypto space in general. It's the first of what will probably be many conversations on this technology and in this space. So I hope you enjoy it. I will provide links to the DaLand CUSO information, as well as obviously the bio and the links for Chase and St. Cloud Financial. So without further ado, here's my conversation with Chase. I hope you enjoy it. Thanks for subscribing. Please leave comments, shoot me an email, go to the website. All of the links will be available in the show notes below on whatever platform you're listening to. So I appreciate it. Have a great day and enjoy the conversation with Chase. Bye-bye. Chase, thanks for joining me. Chase and I met at the Credit Union Growth and Innovation Summit. Chase is quite the crypto guy, and he's got me convinced that I should start storing Bitcoin on my core. So let's talk a little bit about crypto. Isn't crypto still risky?
I think it depends on I think it depends on how you look at it. I think a lot of times in the industry, the conversation goes from 0 to 100% in terms of risk. I think we need to start looking at beyond the word cryptocurrency and look at it in the sense that these are just new money payment networks or money movement networks.
Mm-hmm. How is this different than using like service-based crypto, things like Ethereum and for identity management and smart contracts and things like that? How is that implementation of cryptocurrency in the financial institution space different than what you're talking about?
Elaborate a little bit. What are you are you saying? How is it different between using the blockchain rails as a form of moving value versus identity management?
Exactly. We're talking about dollars and cents and not, identity.
Correct. Yeah. So I think there's a couple ways to look at it, Jason. First is, um, you see payment providers like Strike and Blackhawk using the Bitcoin Lightning Network as a new rail to move fiat, right? So they're if the payment or POS if the uh, retailer or company you're working with uses Blackhawk, you can swipe at the terminal. It's going to convert it from fiat currency to Bitcoin, move it across the Lightning Network, convert it back to fiat. And on average, it's over 1,000% more efficient. So I think that's part one. Part two is, if you think about it, and I don't know the exact stat, but there's approximately 4,500 credit unions in the United States, aggregate asset of about $2 trillion. You have Bitcoin, which is the leading digital asset, cryptocurrency, and blockchain network. It's been around since 2009 and is roughly about $2 trillion in and of itself. Um, and so I think it's really about liquidity. It's about new forms of moving value. And it's really, I think I see it as value going streaming, right? No different than Blockbuster is now Netflix, Uber for taxi companies.
Well, and there's a value proposition there now too, because the primary money movement companies, your Visas, your Mastercards that own the rails are charging an exorbitant amount of fees, and taking them out of the loop or at least bypassing them in some way, shape, or form certainly is beneficial to financial institutions, but members as well.
100%. And here's the more scary thought for our industry. This is probably 3 weeks ago, 2 to 4 weeks ago. I think it was approximately 3 weeks ago. There was an announcement from MasterCard partnering with I think one or two of the largest top 10 digital asset companies where they're going to do closed loop. They're effectively cutting out the financial institution. And to me, that's the more scary thought here is, are we needed in the future movement of valuing money if we don't stake our claim and show our value?
Well, it's interesting. It's almost like early warning system and Zelle. They're creating this closed loop where early warning systems owns that entire payment rail and who's the partners with early warning systems. So, it's another example of these large organizations coming together, creating this closed loop and cornering the market on something that clearly there's member and customer interest in. So what you've been doing with DaLand is certainly something that gets the credit union's foot in the door. Let's talk about where we came from. In 2022, 2023, we had some challenges with folks like, excuse me, FTX, 3 Hours Capital. We had, a lot of very public, not so good things happen there. Um, uh, how should financial institutions address that? Because when you're sitting in a boardroom, there are going to be people that think about the FTXs of the world. You don't want to end up in a situation where you hitch your wagon to some wallet or some exchange that you don't have control over, that that you're really at the mercy of. There were a lot of folks that got burnt by NYDIG. Let's talk a little bit about that as well. How is today different than what happened in 2022, 2023?
Yeah, I think we actually, through our own evolution, you know, our um, our strategy started probably in 2020, and really for our CEO Jed, this evolution or thought process around digital assets started well before that. But through our own strategy, we met with the NYDIGs of the world, and I think the leg up for myself is being personally in the space since 2016. I was already aware of NYDIG and already aware of the FTX offering, and really, I think there's a few things that are really key or extremely important as FIs or individuals look at how are we going to serve our members or our clients in the space. And first and foremost, it comes down to who owns the keys, right? Not your. There's a saying in crypto, not your keys, not your crypto, and really The underlying data or the private key is what's the stake to the claim, or whoever holds that holds the ownership. So if you look at Coinbase, if you look at FTX, if you look at NYDIG, these institutions are holding the client's private key, i.e., they own that crypto. And how we ended up in the situation with an FTX is, like a lot of individuals, including myself, I don't always read the terms of use when I'm downloading an app, right? Or
Mm-hmm.
opening an account. And within the terms of use, the users were granting FTX access to leverage and rehypothecate those assets, and it became a big house of cards. Um, that is where I think, we were midstream in our strategy when the FTX piece happened. We were taking this proof of concept digital asset vault with DaLand and bringing it to a full beta tested product. And it really reaffirmed for us why as an FI, we want to start with safe storage, providing our members a safe place to custody their own assets so that they don't fall victims to the FTX or the NYDIGs of the world. NYDIG had done a great job in terms of they had a very nice onboarding process, a very nice packet, but at the end of the day, all the um, all the clients' assets. So if an FI partners with NYDIG, all member assets were going into one pool, and then as the credit union, you have no control, right? It's just an ACH out to buy the assets. NYDIG holds the assets, and then they were rehypothecating. And so I think it's really about getting back to the basics, right? Credit unions have safely kept gold bars, stock certificates, and now data for members. I think that's where we have a duty to our members, and the industry has a duty to provide safe storage locally for members to store their assets or their private keys.
So when you talk about um, crypto on the core, you're essentially just storing their keys for them. You're just hanging. You're the custodian for their keys. Essentially, is what we're doing.
Yeah, basically, but the product we've built is really a hybrid self-custody solution, right? So the members are using a self-service portal, and the credit union, SendCloud Financial, cannot affect member vault balances. We can't move assets without the member. So it's a hybrid self-custody solution for the members off balance sheet. Yes.
Okay. Um, let's talk a little bit about the regulation. There's a whole bunch of stuff. It almost changes daily. I disappointingly saw some stuff from America's Credit Union and DCUC about their frustration with the Genius Act and some of the credit card stuff that's in there. And do you think that that's risking what's going on with Genius and what's going to eventually make it to some sort of combined bill, or where do you see those two specific acts?
Yeah, so I'm going to go a little more broader. I think, first of all, the fact that we're finally seeing positive framework and positive momentum forward from a regulatory standpoint, from Jerome Powell and the Fed coming out, the FDIC pulling back punitive or prior constrictive legislation or regulation, as well as the OCC. I think the tide is moving towards supporting and providing some framework for financial institutions to serve clients. Now, the NCUA, now Kyle Hauptman has said, plenty of times over the last few years that, really the NCUA doesn't want to tell people what to do, right? They just want to say what not to do. And so I've appreciated their openness for the credit union industry. We're lagging in terms of any official regulation or comment yet to kind of follow suit with the OCC and others, but I do think it'll come. And I think what we're going to see broadly is we're going to see the stablecoin legislation, and then we're going to get some. Um, you have the big beautiful bill, if you will, but then I also think we're going to see market infrastructure bill that comes before they go out of session in August or recess in August. I do think we'll see a secondary legislation proposed here in the near future.
Something specific to crypto and the blockchain in general, not something folded into the, Genius or Stable Acts or, whatever is pending currently. Interesting.
Correct. I think it'll be additional, and I'm in Vegas this week for the Bitcoin conference, and JD Vance was on stage one of the days, and he actually commented around that. But again, we'll see. It's anybody's guess at this point.
Interesting. Okay. Stable coins and Bitcoin and meme coins and all of those other nonsenses. Eh, Obviously there's risk associated with meme coins, and we just want to just pretend those don't exist. There's, people are going to use them for whatever. They're like NFTs. They're going to, use it for whatever value they find out of it. It's like buying baseball cards,
Yes.
it's really no different. It's an asset. It's, it's not real. But obviously we're talking here about stable coins, and we're talking about, store of values. We're talking about legitimate payment coins. How do you, go into a boardroom where you've got a bunch of board members that may or may not have a whole lot of knowledge about this topic, and talk to them about the difference between a stable coin and a meme coin and, service coins and things like that?
Yeah, I think I would bring it back to it doesn't what is going on within your institution, right? I would first tell the members in that room that if they're not looking at the liquidity leaving their financial institution on a monthly or quarterly basis, I would start there. And I would say we're at a crossroads, no different than when credit cards got introduced, right? It's foreign to us, but at the end of the day, if our members are transacting in the space, if our members are deciding to store some of their wealth in a asset like Bitcoin that can't be debased, then it's not really up for us to um, like it or don't like it, right? It's up to us to serve our members, meet our members where they're at. And if you look at, and again, depends on your size of credit union. I talked to one executive of a credit union yesterday that said they have 80 mil. Now they're a multi-billion-dollar institution, but they have $80 million on a quarterly basis that's leaving their institution, going out to Coinbase and other exchanges. For us, it's a few $1,000,000 a quarter, or a couple $1,000,000 a quarter. And so I think it really starts with, it's not for us to decide if we like it or don't like it. It's for us to meet our members where they're at. And I think we're going to continue to move in this direction of it's quicker, faster, cheaper, right? If you look at a credit union, we're essentially a private ledger. You have the Bitcoin network, the Ethereum network, public ledgers secured by thousands of nodes or computers across the globe.
Mm-hmm.
And so I think we need to look at, over the next 5 to 10 years, what is our role and how can we best continue to support our members as we see the digitization of money occur and money and value become streaming.
Absolutely. You had mentioned a couple of different coins there, Ethereum and Litecoin. Do you think those are kind of the front runners to be the main payment systems for whatever this next gen payment model might look like?
Yeah, I think there's somewhere between, I don't know, 20 to 25,000 different tokens that are out there today. I think we'll see over the next 5 years a consolidation for sure of less than 100.
Mm-hmm.
Maybe I'm wrong. That's just my gut instinct. And you'll have store of value tokens like a Bitcoin with a limited supply. You'll have payment systems. You'll have Web3 and smart contracts. And then I think you'll have NFT type non-fungible tokens that are used for recording a deed to a home, for example, or tokenizing real estate.
Mm-hmm. So one of the things we talked about in Chicago was crypto as a lever for balance sheet management. There's been a lot of talk about folks like MicroStrategies kind of, pushing their SaaS service to the side and saying, you know what, we're going to start holding crypto as a way for us to handle, our liquidity needs. And, they've essentially become just a holder of Bitcoin. So, is that something your credit union is looking into? Is that something that you see a future in, and as an asset that we would use no different than CDs or any other investment arm that we would possibly lever on the balance sheet? Is that something that you guys are looking into?
Yeah, I would say at this point, we don't have any immediate plans to put Bitcoin on our balance sheet. I do see a future where we do hold Bitcoin on our balance sheet, to your point.
Mm-hmm.
Again, if you look at the return over the last, well, since its inception, it's been the best performing asset because of the fixed supply and demand and all that. Um, but I think that is for us, that is the beauty of the product that we built with DaLand, is that it really allows, so the same tech stack that I have that's going to allow a member to securely store assets will also allow, if and when the FI reaches we're at a point where we're ready to launch it, regulations there, we can go from vaulting to payments across the Lightning Network to buy, sell, to then collateralizing and doing loans against it. And I think when we get to that point where we're allowing members to store or vault their assets and then take a loan out against their Bitcoin rather than selling that precious or limited scarce asset, if you will. When we get to
Mm-hmm.
that point, I think that's the day when we'll see credit unions as a treasury management strategy putting Bitcoin on their balance sheet as well.
Okay. 2025, and I suppose for the next 3.5 years, it's kind of the new Wild West for crypto in general. We've got kind of a favorable administration. What happens in 3.5 years? If let's say there's a blue wave, and we get a bunch of knee jerk reaction the other way. Are you putting yourself into a situation where you're going to have a service that you're going to have to turn off for your members because your governor or the president or Congress has said these things aren't assets anymore? We're gonna bring back the Biden era FTC punitive regulatory environment. How do you set yourself up to make sure that you're as much as possible insulating your members and your credit union against that?
Yeah, I think this is bipartisan. I really do. I think politics aside, I think the amount of innovation that we've already seen and the progress we've seen post-election and the progress I think we're going to see the next 2.5, 3 years, I think it'll be hard to rewind. It'll be hard to undo, especially when you have people like BlackRock that are, the second, third largest holder of Bitcoin now. You have, to your earlier point, you have all of these publicly traded companies now following MicroStrategy from a balance sheet treasury management perspective with Bitcoin. You look at the progress with MasterCard and Visa, and I think we're getting at a point where the snowball is gonna continue to build. And as we see the positive impacts in our society from it, I don't know why any politician would want to go against this innovation. I really don't. And I think we have a window here where it's going to continue to grow. Even you just look at the positive momentum we've seen in the last 6 months. Um, but I think that could be said about anything, right? We can't control tomorrow. Uh, I think we have to right, we're in the risk business. And I think if we continue to listen to what our members need, politics, good or bad, I think we'll be in an okay spot.
I would agree. So what's up? What's next for St. Cloud and DaLand? Where are you guys headed? What's your next step?
Yeah, so we closed the round. Um, we now have a new ownership consortium of DaLand CUSO. It includes St. Cloud as the largest primary or largest principal shareholder. We have two other credit unions, Blaze Credit Union and Ultra Credit Union, as owners, and then we have a few private investors. So we've closed that round. I think what's next is we look over the next 12 to 18 months, the amount of interest around what St. Cloud calls RCU Digital Asset Vault, DaLand calls their coin to core product offering. There's approximately 28 credit unions in the pipeline that have all kind of 24 of them have come in 2025. So we're seeing a lot of momentum from that. And then I think, continue to forge strategic partnerships with different individuals in the industry. We'll have some pretty exciting announcements, very exciting announcements that come out in 25 from DaLand standpoint. And then at some point, we're probably going to seek a small second round just to support scaling, right? We got to staff up and continue to support the scaling business. I think for St. Cloud Financial, we've been live with our vault in our core with a small beta group of individuals, and the goal would be to bring that to the broader membership and community here in the next month or two.
Okay. How big is your beta group?
So our beta group includes approximately 12 of us. I do transactions in and out of the vault. I'd say I try and do it weekly, but it's probably every other week currently, where I'm moving Bitcoin in and out. I'm moving Bitcoin or Ethereum or USDC in and out. I'll go from the vault out to an exchange, from the vault out to a cold storage wallet. And so just continuing to move assets in and out. And just really be road tested. We did partner with Lloyd's of London as well to offer a limited insurance policy for, fraud, theft, loss of keys. The security is unmatched. To date, I don't believe there's anything like it in the United States for banks or credit unions. So I'm pretty excited about that.
Right now, the DaLand integration is it exclusively with correlation, or do you have some other cores participating?
Yeah, so we're on correlation Keystone, right? St. Cloud is.
Yep.
The product itself can be it works with any core. It's just the how it's set up differs depending on if you're on a modern core or not. So it's modern cores being correlation, Fiserv, but it works. The vault works just as well with Jack Henry as well. So it's just how it is set up and I let the tech people worry about that, but it is able to be integrated with most cores.
Great. Anything else you want to tell us about crypto? Anything we missed?
Yeah, I think one thing we have to remember. I think a lot of times because it's cryptocurrency, right? I think the word currency, it goes back kind of to our beginning comment. I think people immediately go from 0 to 100, or they think that it's trying to replace the dollar and topple the government. And if you think about it, all these are new networks, right? Decentralized networks. And the network has a token. That token is used to facilitate securing the network, to facilitate transactions on the network. And so as that network continues to grow, then obvious, supply and demand, the value in that token grows as well. But I think a lot of times people hear the word cryptocurrency and they stop there. They don't get beyond to understand it's a decentralized network. They don't get past to understand what is a smart contract. They don't go and look beyond the headlines to see that JP Morgan, Visa, MasterCard, Fidelity, Apple, Microsoft, all these big companies for 5, 6, 7, 8 years have been filing patents and saying one thing in the media and doing the other. And so I think, the best advice I can give to somebody is take a concentrated 5 hours, whether it's in a day or over a week, get beyond the headlines and beyond the hype and really do the work. And I think if you do the work, you'll understand that it's coming and it's kind of already here. And if you don't have a strategy, I suggest just get up zero, start doing something.
Yep, absolutely. Chase, thanks for this. This quick 30 minutes. This is great info. Enjoy the rest of your day out in Las Vegas at the Bitcoin conference. And I know you've got a whole bunch of other Bitcoin related or crypto related conferences coming up. So we're looking forward to hearing what's coming from you guys at St. Cloud and DaLand. But thanks again for hopping on.
Yeah, thanks, Jason. Have a great day.